Alright, in today's video and for the weekend, I'm going to take a little bit more in-depth look at energy and the energy stocks. I've warned people about this. So first off, just to recap again, it looks to me like oil may have completed the top of this daily cycle. It's back below the 10-day moving average, and the 10-day moving average is turning down. It would still, in theory, need to drop below this trend line here, so it probably isn't done yet. But as I noted in my previous video, we've got some warning flags here. This dropped just slightly below this pivot here, and it doesn't look like, anyway, that oil is going to make a higher high. So I think this is starting an intermediate decline, and that would mean that oil would probably come down and undercut this low here. Now this doesn't necessarily look like something that's going to give us, a really severe correction. This kind of looks like more like what I suggested was going to happen months ago, that oil would kind of be caught in this sideways grind. Maybe something that, let me change this to the 200, maybe something that has to just grind sideways for a lot of time and allow the moving averages to catch up to price. So this is the 200-day moving average. You can see price is still stretched quite a long ways above that 200-day moving average. Oil may just have to continue churning sideways and eventually allow this moving average some catch up to time. But maybe even more egregious is the 200-week moving average right here. So let me widen the time here. So again, you can see that this is kind of a normal stretch above the 200-week moving average, and you can see what we've got now. We're just way above it. So it is conceivable that this sideways grind that I think is probably started may have to run for a considerable period of time. And this is the mistake that people make, is you get a move like this, a very strong trending move. It lasts for a long time. It goes a long way, and people that miss the move, they're impatiently waiting for a pullback to buy, expecting the move to just continue. But what generally happens is you end up stuck going sideways. So now let's look at the XLE, because that's where I think it's going to be the most frustrating, let's put it that way. So here's the weekly average. You can see XLE is just way too far above the 200-week moving average, and I warned people that this was probably going to happen, that if they played musical chairs long enough, and people had just got into this mindset that energy could not go down, and they just kept pressing and pressing, trying to catch every last penny, they'd get caught at the top, and they would end up giving back all of their gains. And so far that appears to be what has happened. People have held on too long. This is already down 12% for the week, and of course we don't know what's going to happen today, but and it's down a lot more than that from the peak. So the people trying to catch every last penny, they've probably given back a pretty big chunk of their gains. This has, in 6 days, XLE has wiped out 6 weeks of gains. So by trying to catch every last penny in a market that was stretched way too far above the long-term mean, I suspect a lot of people got caught, and they've given back their gains. And now what they will almost assuredly do, and somewhere here there'll be a bounce, a convincing bounce, and so that will convince them to keep holding on, that they're right, that this is a buying opportunity, a dip to be bought, and like I said, I'm sure that people will buy the dip, which is going to make it really hard to short this. But the bounces keep you holding on, and then the bounce kind of peters out and it rolls over and goes down and make a lower low. So let me show you what has happened and what I expect is probably going to happen with energy stocks. This is, and let me widen this chart again. This is uranium. I saw this happen to traders in the uranium sector. So we just had a monster move in uranium coming out of that March low, from whatever this was, $7 to over $30. So a huge move. Convinced people that uranium was going to go up forever, and when we got into this area up here, I warned people that we were probably going to have to consolidate, and for multiple months. And but people, again, they were expecting the trend to continue forever, and then they get caught at the top, and then they get trapped in this first move down, which shaves off 35% of their gains. And then they get like I said, they get that convincing bounce that keeps them holding, and then it comes back down again. Another bounce, but this bounce can't get above the 200-day moving average, and back down again. And I am long-term bullish on uranium. I think if the world is serious about trying to cut down carbon dioxide, this is really the only rational way it can be done, is with nuclear. So unless this is all just a scam, which is very possible for politicians to make money in the solar and wind industry, and with carbon taxes and such. If they're serious about cutting down CO2, then this is going to have to be, we're going to have to turn to nuclear at some point. So I am bullish long term, but I'm afraid we're caught in a long sideways churn, and I suspect the same thing is going to happen here with energy. People are going to buy way too quickly, expecting that this kind of a trend is just going to resume really quickly, and I don't think it is. I think this is probably going to be dead. A churning sideways market, certainly for the rest of the year, maybe well into next year, before we could have a chance to start another trending move. Now, at some point we'll get an intermediate cycle low, but you can see we're quickly trying to fill in that gap above the 200-day moving average. And so again, I would try to control the urge to buy too quickly. We've just had a huge move here, and it probably means this is going to be dead money for many months as it churns sideways and consolidates this huge move that we've had over the last 2 years. It's probably time to look somewhere else. I think stocks are about to give us a very convincing bear market rally here any day now, and metals are more than overdue for some kind of trending move. They have already been in that long sideways churn after the after this huge move up. Let me widen this just a little bit more so you can see this playing out clearly in the metals. So we've had this huge move up to this peak, and this kind of a blow off top thing. It really took price far above this 200-day moving average, and then everybody was expecting a quick little correction and then off to the races again, but anything but has happened. We've just been stuck for over a year and a half now, just churning sideways. And granted, we're getting some help from the cartel. They want to keep gold pinned below 2,000 if at all possible, especially with the Fed in this narrative that they're fighting inflation. So but you can see how this plays out. I've showed it to you in the uranium sector. You're seeing it play out in the gold sector after this really big move. It's really glaringly obvious in Bitcoin. I tried to warn people, when something stretches 200% above the 200-day moving average, that's a bubble. And usually bubbles, the first leg down will be followed by some kind of a retest or a double top. That's what we got here. Bitcoin actually made a higher high, but then the real collapse began, and you can see the bubble sentiment. People are still trying to find excuses for why Bitcoin is going to turn and go back up and go to $100,000, despite all of the signs being pretty clear that the bubble has burst. The double top, another leg down, and then we got another failed intermediate cycle that is broken below this low. Price is not able to get above the 200-day moving average, and I've said before that Bitcoin will almost certainly retrace all of the breakout move. In the breakout, you can make a case that it came right here at about 14,000. Maybe you could make a case for 20,000 being the breakout right here. But either way, it's pretty clear that the bubble has burst in Bitcoin, and that doesn't mean Bitcoin has to go back to zero, although I'm pretty skeptical about something that has basically no barrier to entry having any real worth. But even if there is some utility to the blockchain technology, it typically takes a long time for these bubbles to bottom, and then they have a long period of churning at the bottom before they can start back up. So we clearly have not washed out that bullish sentiment in Bitcoin, because I still see lots and lots of traders trying to find excuses for why Bitcoin is on the verge of rocketing higher again, and I think it's probably got months and months and months, or maybe even years and years and years of bottoming before this could go back up again, and there's some question in my mind as to whether or not it has any value at all, and could maybe go to zero, and governments can outlaw this with the stroke of a pen. So again, just an example of what happens after a really big move that we saw in Bitcoin here, that we saw in uranium, that we saw in energy stocks. They usually have to churn for many months, maybe even a year or more, as we saw with metals, before they can be ready to go again. So I think I would fight the urge to try and jump right back into energy stocks. They may be stuck going sideways for probably the rest of the year, and maybe into next year before they're going to be ready for the next really big leg up.